Welcome to my weekend market roundup, 20th March 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They run on TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. Starting with global market analysis, for which I use Q Global running on Metastock. I am using the standard weekly daily at a glance template. Starting with the Australian market AXJO, moving sideways, there is no clear direction. That was true earlier also. In the weekly also it is moving sideways. Q traders may avoid taking any directional trade until it breaks out of the range. Japanese market Topix index, it was more bullish than Australian market last week, and that is continuing. As you remember, I suggested buying right at the weekly trendline support. From there, price has gone up. In the last webinar, Wednesday pre-market webinar, I suggested caution because it was at the upper boundary. We were not going to take new trades. However, we were allowed to continue to hold existing long positions. It is remaining bullish at the close of Friday. Both daily and weekly are bullish. If you are holding long positions initiated when price bounced from the weekly memory support, you may continue to hold at least partial position. Chinese market CSI 300. It bounced up from the weekly memory support, then pulled back to the same support. It is close to the daily trendline support as well. That's why we are not going to take any short trade because of the weekly and daily trendline supports, and we are not going to take any long trade also because backdrop color in weekly is bearish and flow color in daily is also bearish. No trade in CSI 300 right now. Next is Footsie index UK market. This was also moving sideways, and that sideways move is continuing. In the last session, I mentioned that if anything, we were going to look for shorting opportunities because it was in a range and it was at the upper edge of the range. There was a trendline support. That trendline support is breached now, though Friday's candle has a long lower tail as well. If next week price continues to go down, then you may look for shorting opportunities in individual stocks. Right now it is continuing to move sideways. Last is India market Nifty 50 index. It was and it is still the strongest global market if you look longer term. as I mentioned in last several webinars, in recent periods, it was starting to move sideways. After displaying the weekly bearish headwind, it could not go up. On Friday, it reversed at the yellow direction line, displayed a bull release signal, closed with a bullish shape candle, neutral color. Volume was also very high. Looking at that, on Friday, you could look for buying opportunities in individual fundamentally strong stocks. Nifty 50 itself doesn't have any trade setup right now. However, you could look for buying opportunities in fundamentally strong stocks because Nifty regained the yellow direction line and it also created a box setup in the daily chart. Box setup has certain checklist conditions. All these conditions are met on the daily chart. The conditions are it has to reverse at the watermark support that happened on Friday. It has to display a bull release signal that was true, and the reversal has to be associated with very high pressure or volume. In this case, very high volume was there. So all the checklist conditions for the daily chart were met. The weekly conditions were not met. Weekly had one condition, that the backdrop color had to be yellow. That condition is not met. However, it regained the trendline support in weekly. That is bullish. That's why even if we didn't take a long trade in Nifty, you could look for a long trade in individual fundamentally strong stocks. That is the Q technique to catch the swing low. Right at the time, right on the day, it starts to reverse after dropping for a few days. We use the same technique in USA market. We use the same technique in other markets as well. Now let's look at the USA market. Global markets, longer term bullish, shorter term, several markets are moving sideways or exhausting, like Chinese market, India market, UK market, Australia market moving sideways or exhausting. Only Japanese market is bullish. Let's look at the USA market now. For that, I will use the Q Elite on TradeStation and I will use the market ETFs. Hi Jerry. S&P 500 ETF SPY. Backdrop color is bearish. Traffic light color is also bearish. Weekly, daily, both are bearish. Remember in the last few webinars, one or two, when price was making new all-time high here, I mentioned that it was near the watermark created by a bearish headwind, and I mentioned instead of looking for buy setups, I was looking for shorting opportunities. That would be useful because price came down from there. Not much, but individual fundamentally weak stocks might have dropped much more. When did I buy? I bought at the swing low. I booked profit at swing high, and looking at the watermark resistance and the bearish headwind that created the watermark resistance, I was looking for a short setup here. That was timely and once again accurate analysis of market direction. Not that I have any crystal ball, but I was just trying to look for lower risk trades, and the lower risk trades at this point would have been on the short side, and I could take it because there was a bearish headwind in daily at that level and there was a bearish headwind in weekly also at that price level. On Friday, the candle is indecisive, so on Friday I would not initiate any new trade, neither in the long direction nor in the short direction for SPY. Let's see how the other ETFs closed on Friday and last couple of days. Let's see QQQ. QQQ is more bearish than SPY. The backdrop color is bearish for several weeks now, 5 weeks in a row. In the daily, this bearish headwind captured the all-time high. That's why whenever I see bearish headwinds, either in daily or in weekly, I am cautious. Now QQQ is in a confirmed downtrend with lower high and lower low. On Thursday, it gave a bearish flow candle that confirmed the go with flow short setup on Thursday. You could take a short trade in QQQ, or you could look for a short trade in individual QQQ constituent stocks that are fundamentally weak. I prefer the latter approach because in that case, instead of trading the average index QQQ, we can short the weakest constituents of QQQ. That could be done on Thursday. Friday, I wouldn't initiate any trade because like SPY, QQQ also has an indecisive shape candle on Friday. It is looking bearish for swing trading purpose. Dia, here also we see a bearish headwind signal at the very top. It is either the bearish headwind signal or maybe the indecision, bearish indecision at the top. Let's check that out. Okay, if I removed headwind, the dot is still remaining, orange colored dot. Therefore, it is bearish indecision at the top, the relatively new indicator that was released a couple of weeks ago. You will find this indicator very useful because it is showing you the bearish indecision candles at the top. Similarly, the gold colored dots will show bullish indecision at the bottom, helping us to capture the swing low and swing high once again. When the bearish indecision at the top happened on Thursday, which in fact made a new intraday all-time high but reversed. Looking at that on Thursday at market close, you could look for shorting opportunities in individual Dow constituent stocks that were fundamentally weak. Next day, price dropped in Dia, and probably some of those would have covered the risk distance. I expect all those stocks to be in profit if you shorted Dow constituents which are fundamentally weak. If you shorted them on Thursday, they would probably be in some profit by Friday's close. Again, when price was at upper boundary, I was not looking to buy, I was looking for shorting opportunities. And as you know, somewhere along the way when price was going up, it was making new all-time highs. I did short a Dow component that was fundamentally weak, and I am continuing to hold that stock. Let's look at that stock. That was Disney. I discussed it in several roundups earlier, several YouTube sessions. And once again, you see the bearish headwind in action. There was a bearish headwind here that created a watermark resistance. Price tried to go above that and immediately reversed, creating a false upside breakout. In addition, it displayed another bearish headwind. And I discussed Disney right on that day. And I mentioned that I took a short position using verticals, option verticals. I think I took long put vertical, not sure, either long put or short call. So I'm holding on to the trade. For verticals, it is important not to overstay the welcome period. The welcome period would be when price comes to these trend line supports. If price can pierce through them, the welcome period is extended. It's like a computer game. If you can breach these two supports, if Disney can breach these two supports, then you have extended your welcome period. You can continue to hold the vertical position. However, if it pauses at the trend line support or starts to go up from there, then the welcome period has expired and we should close the trade, the vertical trade, and I will do that. I am having reasonable profit. I don't remember the exact percentage. I have some profit, but not yet, it has not yet hit the 50% of max profit. So I'm holding on to the trade. I am aware of the trend line supports and I'm going to close the trade if it pauses or reverses from there. If it breaches the trend line supports, I'll continue to hold until I have 50% of max profit. I am bearish still on Disney except keeping an eye on the trend line support. Therefore, I'm not going to short now. If you look back, I shorted it, I think, on the first possible day. The day before I shorted it, it had a bullish candle in shape and color. It would not be appropriate to short a stock like Disney on a bullish day. Next day would be the first possible day, I think, anybody could short using daily chart. And now I see weekly also has a bearish headwind. Again, weekly also has a trend line support. So I am aware of that. Other than the trend line supports in weekly and daily, Disney is looking bearish. And that is how, instead of trading the ETFs, I like to drill down into the ETFs. And if it is an index ETF, you can drill down into the constituents of any index ETF or any index in general, not only USA index but any global market index. You are able to drill down into the constituents in real time using Q index, and you could look for fundamentally weak stocks. Disney would come out, and that's how I found Disney and shorted it. You could find it from running Q sonars also. If you ran Q headwind sonar or scan, that would also identify the short setup. Therefore, you may employ different workflows. You can look for headwind signal using scan first, that will be using technical first or bottom up, or you could look for fundamentals first using Q vital, or you could even look for top down approach starting with Q edge. All these workflows are possible. Whatever workflow a Q trader uses, he or she finally ends up with a stock where the industry, fundamental, technical, everything is aligned together. So if it is bullish trade, it has to be in a strong fundamental stock with a buy setup on technical charts and in a strong industry, and vice versa for bearish trades. And of course, we look at the market and try to take long trades in a bullish market and short trades in a bearish market. And when I'm saying bullish market, bearish market, I'm not talking about the long-term bullish market or not. If you look at a longer term chart, certainly it is bullish. But when I'm saying in a bullish market, I'm going to buy, I'm referring to my market view for swing trading purpose that I explain in every YouTube session, and I also post the forum trading ideas keeping the short-term swing trade market direction in mind. If market is bullish, I'm going to buy stocks. If market is bearish, I'm going to short stocks. Is there any exception to that? Yes, there is. That is, if I am looking, the industry was in opposite direction to the market. That is, the market was very bullish, but the industry, for example, biotech was weak, and now market may be looking not so strong for swing trading purpose, but biotech is starting to rebound. In that case, I am okay to start buying stocks in biotech as a turnaround candidate at the industry level. Then I will also look for possible turnarounds in earnings growth. And of course, all the swing trade setups in Q systems, they are kind of turnarounds because they are trying to catch swing lows for buying opportunities. So all these are turnaround candidates. They give us low risk trades, and I explain such setups using live market. I don't have the habit to look back and say you could buy there. Anybody can do that. I always explain trades on the day I identify, just like I did for Disney. And if you follow me on the forum, you will see the success rate is not bad. I think any trader would be happy to have that kind of success rate. In any case, Disney was a Dow component, constituent of DIA, and though DIA was making all-time highs, I could confidently short Disney and explained it before knowing the result. Publicly, the trade is doing all right. I would not buy DIA now. What about small cap ETF IWM? Again, when IWM was here, in the last webinar, I specifically mentioned that I was not going to look for buy setups. If anything, if it is reversing below the watermark resistance, then using the concept of false upside breakout, I was going to look for shorting opportunities. In this case, there was no box short setup because there was no pressure, neither was there very high volume. Therefore, IWM itself didn't give any short setup, not the box setup that we would expect at a double top with false upside breakout, but individual small cap stocks might have given such setups, reversal kind of setups. Now on Friday we have again an indecisive shape candle. Weekly is bearish, so I'm not going to take any trade at close of Friday. We'll see how the market moves next week and then take our trades accordingly. We saw that over longer term, of course, all the market ETFs are bullish. For swing trading purpose, all the market ETFs are not allowing us to buy. If anything, it is telling us to short. That is the view we get from all the market ETFs in the USA market. And the support is also some distance away. There is no concern that it is near support. That is true for IWM here. Let's look back again. QQQ, the support is still some distance away. SPY, support is still some distance away. And DIA, support is still some distance away. So if we get shorting opportunities in individual fundamentally weak stocks, we are allowed to take them so long as we have a proper Q trade setup. Market ETFs are allowing us to short, not to buy now. Let's look at the Q edge, that is the sector, industry, stock, market breadth. Let's look at that picture first. That very useful. Month 1 to 1 day, 1 month to 1 day, sector, industry, stock, advanced decline, breadth. 1 month, like a broken record I am saying in so many webinars, is remaining bullish, it seems, forever. 10 day is still bullish, but now 5 day, 2 day has turned bearish. Friday was bullish or mixed, you might say. Sectors were more bullish than bearish. At the stock level, it was slightly more bearish than bullish. Industry level, how nice, 50-50. Neither bullish nor bearish. Overall, it is, you may say, mixed picture on Friday. And even if you thought it was bullish, that was nowhere near strong enough to turn the today performance to bullish. Today is still very bearish, very, very bearish. So Thursday, Friday together is still very bearish. That shows that Friday's performance, even if you think it is bullish, is very little. I would say it was mixed, because at stock level, in fact, more stocks came down than went up. Now, if we look at the sector performance, let's look at a little bit longer term period. Now, over 5-day, only one sector is up, that is utilities, and that is also up by a very small percentage. So this week is very bearish. Over 10 days, it is still bullish. Only one sector is down, 10 sectors are up. Which sector is down over 10 days? The green bars. Energy. Energy is down over 10 days. And over 1 month, 9 sectors are up, 2 are down. Which are down? The blue bars. Over 1 month, infotech is down and healthcare is down. Healthcare was lagging, and I saw healthcare, some industries are starting to turn around. So I posted some ideas, buying ideas in healthcare sector. We'll review some of those posts when we have time today, if we have time today. Overall, the sector industry stock breadth is not telling us to buy right now. 1 month is bullish, 10 days bullish, but 5 days bearish. That is not telling us to buy again, unless the industry was moving opposite to the market in recent weeks and months. In that case, using industry turnaround, we are allowed to buy, like in biotech or healthcare sector. We'll look at some of those trades. Now let's look at the technical breadth. I find that very useful, and I'm sure all Q traders do the same. First, look at the weekly picture, the balance between bears and bulls using Q technical signals weekly interval. What can you see from here? All signals, 69% is now bearish. Remember my last webinar, all signals were either mixed or bullish. However, I mentioned repeatedly that the reversal signals were predominantly bearish. That was showing the weakness, and as usual, you may remember I highlighted the large number of bearish headwinds in the weekly charts. That is always a sign of caution, and that cautionary signal helped me once again to book profit right near the market top and even short some stocks. Those stocks are in profit, and I will only discuss trades that I shared before knowing the result. I might have taken many other trades, but I don't want to discuss them. I will just share the trades that I discussed when I took them before knowing the result. And I took those short trades looking at the bearishness of the technical breadth, particularly the headwind signals, and in general the reversal signals were very bearish in the last YouTube session. Now all signals have also turned bearish. Strength signals are bullish. That is because of a large number of gap ups in this week. Trend continuation signals are also bearish. So it had large number of gap ups, then large number of reversals. That is always a bearish sign. Gap up, reversal, always a bearish sign. And the overall picture has also turned bearish, telling us not to look for many long trades, unless of course again like a broken record, unless the industry was moving opposite to the market. Friday's picture itself, well, I mentioned it earlier when reviewing the Q edge market breadth. It's a balanced picture. When you look at all signals, it's not a bullish picture. Strength signals more bearish than bullish. Trend continuation signals balanced. Reversal signals bullish than bearish. Overall, it is a mixed picture on Friday. Daily picture mixed or balanced. Weekly picture bearish, telling us not to look for buy setups right now. Now let's look at market breadth. To save time, I'll just look at the custom index mega cap top 20 first and then go to total view. Mega cap top 20, the key information is it is hugely underperforming the market. And that I mentioned in the last webinar also, that I was not going to buy mega caps even though it bounced up from the trendline support in weekly. Why? Because though it bounced up, it was still hugely underperforming the market. Why would I buy instruments that are underperforming the market? That view is continuing. Not going to buy underperforming instruments. Mega cap is not the best instrument to buy now. That is clear from the relative performance tilting down. Now let's directly go to market breadth total view, the single weekly daily chart that tells us a lot. And all these insights are based on 6 indices, 2 composite indices, Nasdaq and NYSE, and 4 major indices, S&P 500, S&P 1500, 500, Nasdaq 100 and Dow Jones. First let's look at the stocks where 50 MA above 200 MA. For a long time it was above the average line, but in last couple of days it has rolled over below the average line. Same is true for weekly. For the percentage MA calculations, we may just look at the daily picture. The weekly is just summation of the daily picture, doesn't provide any additional insight. The percentage of stocks are 50 MA above 200 MA. This is the slowest of the MA calculations, the last one to roll over, and that has also rolled over below average line. Percentage of stocks above 50 MA, in spite of the recent rally, it could just go to the average line and rolled over again. So it is now creating a series of lower highs and trending down. That is bearish, and if you think of it as a stock chart, it is right at the retracement swing high. That would be the ideal position to short. Thinking of it as a go with flow trend following short set, this would be the ideal position to short. So it is not telling us to buy right now. And the same picture we may see from the last percentage MA calculation, percentage of stocks above 200 MA, also creating lower high, lower low, rallied in last few days but couldn't hit the average line, tilted down again. So these percentage MA calculations are also not telling us to buy right now. It's showing market weakness. If we look at the accumulation and distribution count, and I have to apologize for a mistake I made in the last webinar. If you remember, this picture had a series of accumulation counts and all of them were due to Nasdaq Composite. That was a mistake, not on this program, but mistake in my running Fire. When I ran Fire, somehow, I don't know how, but somehow the Nasdaq got unchecked. Because Nasdaq got unchecked, when I opened the market breadth total view, it read the last information available in the database, that was a bullish accumulation in Nasdaq. It continued to plot that for next several days because it had no further information from Fire. So I noticed that, sorry about showing that in the last webinar. Last webinar had series of accumulation in Nasdaq Composite, and therefore the count was also one accumulation count for several days. That was my mistake because Nasdaq got deselected. So when you are running Fire, you may double check. Usually it should be sticky, it shouldn't change. It was my mistake, somehow I might have unchecked it. Maybe I was testing something. In any case, that has been corrected, and now you see there was only one accumulation count in recent days, that was because of Nasdaq Composite, and the accumulation count before that was because of Dow Jones. On Thursday, we actually have a distribution count that is because of Nasdaq 100. So we see that percentage MA calculations are showing that it is not time to take long trades, and the distribution count on Thursday because of Nasdaq 100 is once again telling us that mega cap tech stocks are not the ones to buy, because Nasdaq 100 is mega cap tech heavy. We just now reached at that conclusion from mega cap top 20 chart also, that custom index, and here we get reinforcement on that idea, because the only distribution count we have on Thursday was because of Nasdaq 100. There is no distribution count of 2 yet. If we have a distribution count of 2, we will be more cautious. No market drop has ever happened, as far as I studied, without a distribution count of 2 or more. Distribution count of 2 will be colored in red, so we'll get to know that immediately as it happens. We'll see if it happens next week. It has not happened yet. In any case, the percentage MA calculations are telling us that it is not the time to buy. Now let's look at some of the both long and short trades that I shared, and I tend to share them on Twitter, so I have different ways of looking at stocks. Always using Q systems, always looking for 360 degrees trades where all forces are aligned. But I have different ways in the sense that sometimes I start with Q scan on Metastock, or I start with Q elite sonar radar on TradeStation, that is bottom up. Sometimes I start with Q vital fundamental first, and sometimes I may start with Q edge top down. And I keep on sharing those snapshots to give you an idea the different ways I am looking at or finding stocks. And this is one tweet I shared on 18th March, 11:30 a.m. I compared two stocks, ExxonMobil energy sector stock and PRGO, I think healthcare sector stock. Recently, energy sector was very strong and XOM was going up, ExxonMobil. Healthcare sector was weak and PRGO was going down. Q traders, including myself, we are very good at buying stocks at lower price. We may take breakouts at the top, but that is not the underlying philosophy for Q trading. We try to buy at a lower price, and when others are taking breakout trades like IBD type trades, I am booking at least partial profit. That is the Q approach. And why I shared this example contrasting these two stocks is to highlight that technique once again. And let's look at the Q sonar snapshot that I shared, PRGO and XOM. I shared it on which day? March 18th. So that would be Thursday. On Thursday, 11:30 a.m. New York time morning session, I showed these two stocks very opposite in nature. When you looked at them through Q sonar, PRGO was up by 1.4%. ExxonMobil was down by minus 1.5%. If we look at the go with flow column, PRGO had a bullish flow, XOM had a bearish flow. If we look at longer term price pattern, PRGO was at pendulum low, XOM was at pendulum high. If we look at trend using white and yellow direction line, Q sonar shows that using the DIR column, PRGO was in a confirmed downtrend, meaning it was below both white and yellow direction lines, and those lines were also coming down. whereas ExxonMobil was in a confirmed uptrend. Meaning what? Meaning it was above both white and yellow direction lines, and those lines themselves were also going up. Both of them were in Q squeeze. So we could anticipate a medium to significant price move if it came out of squeeze. And if we looked at relative performance, PRGO was outperforming the market, ExxonMobil was underperforming the market. So what we could see when we dropped these two stocks on QSonar is that on that day PRGO was doing better. We could see that from percentage change, C plus minus column. We could see that from relative performance. We could see that from go with flow column. And if we look at longer term price patterns, then we see PRGO was earlier down and it was in a downtrend. So what it showed that if we are going to buy PRGO, we are going to buy a stock that was in downtrend at a very low price point, pendulum low. If we were going to short XOM, we are going to short a stock that was weak that day. However, earlier it was very strong. That is the Q swing trading philosophy. Short the top, at least swing high, buy the low, at least swing low. In this case, it was not only swing low for buying, but it was also pendulum low for buying. It was not only swing high for shorting, but it was also pendulum high for shorting. Those were more lucrative buying and shorting points. Now, I didn't share the full fundamental and technical strength. You may look into that, but let's look at the two stocks, what happened after that. Remember, I tend to share forum posts when all the forces are aligned. Maybe something was not perfect for these two stocks, meaning maybe the trade setups were not meeting all the checklists, or maybe the industry fundamentals were not that strong yet for buying or not that weak yet for shorting, or maybe I was just lazy to put it on my forum. Sharing on Twitter is much faster. That could also be a reason. So I will not look at fundamentals probably unless I have time, but let's look at their technicals. I shared it on 18th March. That is important to remember before knowing anything how it is going to turn out. And today is 19th close, so let's look at them. Let's look at PRGO. And why don't we look at the fundamentals also? PRGO.K. Let it sign in and do the calculation. Let's look at PRGO. I shared the idea on this day in the morning session on Thursday. Why did I share it? It was unambiguous to my eyes and to any Q trader's eyes to decide to buy this stock using Q technique. If you're a Q trader, I think you would be very happy to buy it on Thursday based on when I shared the snapshot. I will come to that qualifying statement based on when I shared the snapshot. Let's look at the chart today. It came to many watermark support levels in weekly, and that level had a large number of long lower tail candles, making it very obvious that larger buyers were stepping in. Otherwise, price would not go up considerably from those levels. And because these are weekly candles, these moves are significant for swing trading purpose. And now price again came to the same watermark level, in fact penetrated below that and then reversed. That is even more bullish. That's a false downside breakout associated with very high volume that is even more bullish in nature. Also, and I am using the headwind signal once again, the watermark here was created by a bullish headwind earlier that led to a price move up. So it was very likely that price would go up again from the same level, at least enough to give us a profitable swing trade. Very high probability trade. So the weekly was looking, in fact, I would say perfect for catching the low, and not only swing low, but also pendulum low, and that too pendulum low in both weekly and daily. Now, I said when I shared the snapshot, because when I shared it in the morning session, I think the upper tail was not there. The day on Thursday closed with an upper tail, so if you were thinking of buying it using Q technique, you would not buy it on Thursday's close. I might have bought it already using intraday chart on Thursday, and Friday it went up. Now when I was explaining the market, the sector, industry breadth and market internals, I mentioned it is not the time to buy. And I also mentioned if a stock was moving or industry was moving opposite to the market and now turning around to the upside, those are appropriate buy setups now. And PRGO seemed like one on Thursday. I shared it in the morning session. So far you can see it is doing pretty well considering the weakness of the market. And while I shared PRGO with bullish connotation, on Twitter I shared ExxonMobil with bearish connotation based on Sonar, and see what happened. By the way, in PRGO, if I remember, I am holding a long stock position. Either long stock or synthetic long position. I always forget exactly which instrument I am trading. I have sometimes number of trades on, but I remember the important thing. I am holding a bullish position in PRGO, and I am holding a bearish position in ExxonMobil. Let's see what I saw on ExxonMobil. ExxonMobil was going up strongly when energy as a sector was strong. Then at the very top it displayed bearish headwind signal. So I was cautious from that point. It displayed bearish flow on Thursday. In the morning session I noted that, and I think I took a short position using put verticals. When one is trading bearish position using put verticals, usually it's not worth the effort and time to try to leg in. Meaning, if I'm using put vertical, buy the long leg first, use the intraday chart, see price is dropping. When on intraday chart price stops dropping, sell the short leg. That is called legging in. Mostly it is not worth the time and effort for it. Now in this case, somehow I was in front of the monitor, and instead of trading the vertical outright, what I saw on Thursday, this is Thursday, I'm using 10-minute now, but in real life, in the morning session, I would use 5-minute chart, so why don't I change it to 5-minute chart? This is Thursday's early range, high and low, narrow band. Then price went below early range low. I don't remember exactly when I took the bearish position, somewhere here. Again, it is not worth the time and effort to try to leg in, but I somehow happened to be in front of the monitor and I legged in. So I bought the long put first, and not here but here. When I saw price started to go up, I shorted the short leg. So I ended up with the same long put verticals. Then price fell again, but I probably fell asleep by that time. Once the vertical trade was complete, I had no reason to track it. Why? Because verticals for me are what I call fire and forget. The moment my vertical buying was complete, I placed a GTC order at 50% of max profit then I don't have to track it. So no point looking at it even every day. Forget about every hour. No point, because let it play out unless there is a significant change in the market or underlying, in this case the commodity, there is no reason to track it. So I let it play out. I checked as of Friday's close, I have 40% of max profit. My GTC order is at 50% of max profit. So next day, Monday, next week, if price goes down little bit, then I will hit my target and the GTC order will get filled. If you look at the weekly daily, it is looking bearish enough. Though Friday's candle shape is indecisive, color is still bearish. In fact, it fell quite rapidly for last couple of days. I didn't short it based on the bearish headwind. I could have, but I didn't. I shorted only on Thursday, and even then I have 40% of max profit in the trade using verticals. Fire and forget trade. The weekly has very bearish shape. So if it comes down little bit on Monday or Tuesday, I will hit my profit target. Now I have 40% of max profit. My target is 50% of max profit. Am I going to let it go into a loss if price starts to go up? I doubt that. I'm just 10% short of my profit target. I am not going to let it turn into a losing trade in case it starts to go up. That is what I'm thinking now. I will track XOM, and if you followed my tweet, you probably could guess based on the tweet that I was bullish on PRGO because the swing trade setup using bullish flow, that was for PRGO, and bearish on XOM. The longer term period, it was opposite, PRGO as bottom, at bottom, XOM was at top. That was even more lucrative for me to trade in the way I did. And again, those two trades are in profit now. Nice success rate, isn't it? If you track my trades, again, I always share before knowing the result. Nice success rate, one probably has no other way of putting it. Now let's look at a forum post. And when I share a forum post, by the way, the fundamentals for PRGO is retrieved now, and you can see fundamentally also it was strong. Undervalued stock, negative earnings growth, but that is okay. The valuation allows us to buy. And just to complete PRGO's analysis, let's look at its industry. That is relative score using QH. Pharmaceutical was very weak earlier. You can see not only Friday, from Thursday itself it was starting to strengthen. So I was allowed to buy using Q technique. It was a 360 degrees trade. Well, why not I complete the same analysis for XOM? As you know by now, I try almost always, maybe except barring a few cases where I'm trading biotechs, I try to align the forces in my favor. Now see ExxonMobil. It was very bullish. Now how many people would short ExxonMobil? Not many. But I saw it had negative earnings growth. Valuation also not undervalued. That allowed me to short. And if I look at the industry, not Fridays, I have to find out how it was on Thursday. Let's see. See, Friday it turned up, but that didn't make the 2-day score bullish. That means Thursday when I looked at it, it was pretty weak. That is what we can infer from the score. Friday was bullish, that's fine. I wouldn't know about that for the industry, how it would turn out on Friday. My sharing was on Thursday, and the fact that even now today period is very weak, Thursday was certainly a weak day. So that allowed me to short. So it was a 360-degree short idea. On Twitter, sometimes I am lazy to share all the ideas, but these are meant for Q traders. Almost all of you have all the Q systems that I use. So you could run the check and find that ExxonMobil had a buy setup and ExxonMobil had a short setup. PRGO had a buy setup. Now this is another tweet I shared. March 19 in the morning session again. I'm trying to sleep little bit early sometimes nowadays. Earlier I used to often stay awake for a long time because I'm in the opposite time zone. Nowadays I'm trying to sleep early, so you will see my tweets or forum posts tend to be in the morning session more. Or next day after I wake up. So this was again a morning session tweet and forum post on March 19th. That would be Friday, isn't it? Yes, Friday, 11:16 a.m. And I have all the snapshots how I looked at it at that time. Let's see them. Then we'll see how it closed Friday, but let's see how it was when I shared it, 11:16 a.m. CAPR was the stock. Biotech. It regained score heavily on Friday, both for the primary industry of the stock biotech and alternate industry, biotech and medical research. It had huge gain in score, so it would probably show as acceleration on Friday. And you can see the percentage performance also. From large negative percentage, it became more than 1% positive between Thursday and Friday. So that was a turnaround industry, and we could see that clearly from the relative score for biotech. Strong industry on Friday as of the morning session, and it was accelerating as well. Allowed us to buy a biotech, and I found CAPR medium valued. Valuation is medium, short squeeze potential, and has steady earnings growth in last 3 quarters. And when I shared it, 89% of peer stocks were up. So fundamentally, CAPR allowed us to buy, the industry allowed us to buy, and see the technical setup. Again, this is the Q technique, trying to buy at lower price. Very different from breakout or IBD style. We may end up buying the same stock, but Q traders like myself, for example, would buy much before an IBD trader would buy. But we often end up buying the same stock. In the end, of course, in the end, because I tend to buy, Q traders would like to buy much before IBD kind of breakout. Of course, both are very robust techniques. IBD system is very profitable also. It's just a different style of trading. I like to buy low, and what I saw in CAPR, it created, this is a daily chart, created a long base. Price was creating a long base, then it went up. The first time it goes up from a long base, that is not my best time to buy, not in my technique. Rather, I wait for it to pull back and create either a false downside breakout or a higher low. In this case, not a false downside breakout, but a higher low, and it came inside a triangle pattern created by support and resistance memory trend lines, displayed a bullish headwind 2 days before I shared it, but that time it was below the memory resistance, and the day when I shared it in the morning session, it was breaking out of the triangle pattern, breaking out of the trend line resistance. So it gave me a breakout setup. But again, it was in the morning session, so I think I mentioned in the forum post that as always, Q setups are confirmed at the close, and you could see that there was a bull release also. Let's see how CAPR closed Friday. Friday was not a particularly strong day for the market, but let's see CAPR. It closed with a long upper tail. So if you didn't buy it using intraday fine-tune chart, if you are using Q guideline, you would not buy it at the close on Friday. This is looking bullish, but for two reasons. One, might not buy at the close. One is it had a long, not very long, but still it had somewhat long upper tail. And the other thing is it didn't have bullish pressure or bullish activity. When a stock is in a downtrend and breaking out, I like to take the breakout only if it has bullish pressure or very high volume. If a stock is moving sideways and then breaks out of some trendline resistance, then I may not be so particular about the bullish pressure or high volume, but this was in a downtrend for this period. So those were two reasons one would not buy probably at the close of Friday. But it is still looking good to me, at least. Daily has 3 successive weeks of long lower tails showing that buyers are stepping in. If next week means Monday morning session, it starts to go up using fine-tune chart, one might consider buying. Good fundamentals, industry is turnaround candidate, and this stock just broke out. Also a turnaround candidate, displaying higher low now. So it's a buying at swing low once again. Another trading idea I shared on forum, I think that's also on Friday. Yes. And this is a stock that IBD traders might also buy, but they would buy later. You may write it down. They would buy later. Not guaranteed, of course. In trading, nothing is guaranteed, but I think they will end up buying it later when the cup and handle breakout happens or similar IBD style breakout happens. Now, when did I share it? 12:40 p.m. Friday. This is a stock that Dr. Jeffrey mentioned many times earlier, Tandem. And let's look at the detailed post. Tandem healthcare equipment stock. The industry score was gaining strength when I shared it. The industry performance turned positive from negative one day ago. So Thursday was a down day, down by more than 2% for the industry, and Friday, when I shared it, it was already up by 0.31%. Score was gradually improving, relative score. So that allowed us to buy not the most strong industry, not like the industry of CAPR that was stronger, but it was also improving, had some acceleration. The fundamentals are great. 450% earnings growth in the last quarter. When I shared it, it was up by 4.8%. And not only does it have very high earnings growth in the last quarter, it has steady revenue growth for 3 quarters and 3 years. When I shared it, 89% of peer stocks were up. And let's look at the technical chart. And this is again a typical Q style trade. Just now when I explained the other stock I mentioned, I would have bought CAPR either if it created a false downside breakout or a higher low. CAPR created higher low. And what did Tandem do? Tandem created a false downside breakout in daily and weekly both. The weekly has a series of long lower tail candles at this watermark level, showing buyers are supporting this price level from below 80 to the current price level. Daily also it went back above this watermark support, created a bull release signal. In this case, it also had bullish pressure, bullish traffic light. So I could buy it right at the bottom. Stop would be just below the recent low. When I shared it, let's look at the post again. It was up by 4.8%. Now I take maybe 5 minutes or so to post the idea on forum. So if I bought it, I probably bought it some few minutes ago. Let's look at Tandem now at the close. It closed with a very bullish shape, bullish color candle. So unlike CAPR, when I said that at the close one would not buy CAPR, for Tandem I would be okay to buy at the close as well. But I already bought earlier, and I remember Tandem I bought using synthetic, and I bought somewhere probably at this price level, and I used the 90 strike. slightly out of the money, shorted 90 put, bought 90 call, and I made the expiry beyond the next earnings. So if we see the next earnings for Tandem, okay, we can see it from the post also. Next earnings is here, 28th April. So I chose expiry beyond 28th April. So I have enough time in hand. It's a synthetic long position. That means I have the confidence to hold on to the stock in case it comes down. The chart pattern is looking good to me. The earnings growth is certainly very nice, 400 plus earnings growth. The industry is turning around, and I also used Zenith to look at the news. You know, one thing I mentioned earlier also, let me reiterate. We saw the earnings growth in last quarter. Let's look at it again. No harm looking at it again. A stock with earnings growth of 450% in the last quarter. But what happened after the quarterly result? After the quarterly result, it gapped up. Where did it go? I don't know if the trendline resistance was there at that time, but it went to the trendline resistance and also the watermark resistance. Sharply came down. That was a huge gap short opportunity on that day. In any case, it fell down, but it found support at watermark support. So it reversed from watermark resistance after great earnings, found support at watermark support with very bullish shape candle, and currently it is holding on to the price. This is the first such bullish candle with bullish flow, both in the daily, also in the weekly. If you see since earnings, if you look at the weekly candles, this is the first bullish shape candle in weekly. This is the first bullish shape, bullish color candle in daily of that magnitude since this drop associated with earnings, which was very high. So if you put that in perspective, and also if you use Zenith to do some more research, apparently they also hired somebody, if I remember correctly, to look at artificial pancreas or something like that. He was appointed as head of some department or some medical unit, high position. So that was also a positive news. Chart was very bullish for me, bullish pressure as well, bull release. So I took a long position with synthetic position. I used 90 strike, slightly out of the money. If price, now you see it is already 89.7, so it just little bit, if it goes up, my long call will be in the money, short put will be out of the money. I have placed GTC order to book profit on the short put, though my expiry is far away beyond earnings, that's far away, but I will book profit on the short put once I have maybe between 50 to 80% of profit. I have time, not in a hurry to close the trade. I am bullish on Tandem, and as I mentioned, Tandem has good earnings growth. Dr. Jeffrey traded it earlier. He mentioned it many times. Strong company. Now, breakout traders would buy here, and IBD style traders would probably buy somewhere here, provided there is a good pattern, cup and handle or some other kind of pattern. But I bought long time ago. That's what that's why I commented. If it is a high growth stock using Q technique, I buy the same stock, but I buy much before then. And by the time there any IBD trader is going to look at it, I think they will buy, not before this price point. By that time, I am reasonably confident my short put will exit with profit and I'll hold on to the long call. We'll check that out. I have the long position. If I don't forget, I will track it and share it with you. In any case, you may track it. The important thing is I shared the ideas before knowing the result. How they are doing, you may find it out yourself. Market is not looking strong. That's why I could short confidently stocks like ExxonMobil, Disney that were at the top, that were moving with the market and went up. And I also confidently bought some stocks that were moving opposite to the market. Now those industries are turning around, and I took swing low buying opportunities. One thing is constant between those short trades and long trades, that stop is narrow. Another thing that is constant between these short and long trades, that I aligned forces from all the levels, industry, fundamental and technical, in my trades, and they tend to be, as you know by now, pretty high probability trades. I will end today's session here. I look forward to seeing you in my next session. That will most likely be Wednesday, 8 a.m. Eastern Standard Time. I'll notify on Twitter, and you will also get notified if you're subscribing to the YouTube channel. Thanks once again for joining. And as I always say, keep safe and trade profitably. No reason not to do that. Thank you.